Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 19th of November, Thursday. So as usual in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold extending losses by 0.42%, the pair of GBPUSD climbed higher by 0.14%, the dollar index fell lower by 0.08%, and oil climbing higher by 0.56%. So let's get into details with our headlines of today. First off, let's talk about the oil market, where we can see crude oil managed to pare some losses on Wednesday following a lower than expected build-up in the US crude inventories. Now, according to the Energy Information Administration, or the EIA, US inventory levels climbed higher by 0.7 million barrels last week, comparing to the economist's expectations of 1.6 million build-up. Now, the black commodity continues to trade within mixed market signals, where on the positive front, we have the upbeat vaccine news boosting market optimism. However, with the record rising number of COVID-19 infections causing fear of a weak oil demand recovery, pressuring oil prices. So investors are currently waiting for the final confirmation, which is the official release of the vaccine, before pricing in their bets on the crude oil market to support prices back to its pre-pandemic levels. So instruments involved here will be crude oil itself and also the Canadian dollar, where Canada's economy depends highly on the prices of crude oil. Moving on, let's discuss on the pound, where we can see Brexit headlines dominating a quiet market. Now, with lack of economic data and high impact events in the market this week, investors are now turning their focus on the long-awaited Brexit deal. Now, the optimism for a deal was recently spotted by comments from the UK's Brexit negotiator David Frost after he hinted on a possible deal as early as next week. Now, furthermore, reports on Wednesday signaled that the French President Emmanuel Macron is ready to give in on UK's demand for full sovereignty over its fishing waters. Now, this is a major breakthrough, as the fishing rights or the access to the fishing waters in the UK has been the major sticking points in the Brexit negotiations. So, situation could happen two ways, where there might be a deal or there might not be a deal. However, investors will not be entering into the pound market aggressively until they have a further confirmation. So instruments involved here would be pound itself. Moving on, let's take a look at the news release for today. So please take note, time stated here at GMT plus 8. So the first data would be the European Central Bank speech led by President Lagarde at 4 PM. So investors can focus on the central bank speech to obtain the latest outlook on the European's economic performance, and also to obtain further signal or further clarity on whether or not or what further policy actions that will be taken by the central bank in order to support the euro's economy. And at 9:30 would be the unemployment claims data from the United States, where it's expected to fall lower by previous week of 709,000 to 707,000. So overall, the number of unemployment claims data is still high. The figure is still high, signaling that the labor market in the United States is still not healthy. So any reading higher than the forecasted value would actually exert negative pressure onto the US dollar. So moving on, let's take a look at the technicals for today. So here's an overview of instruments to be covered. First off, GBPUSD daily chart showing an uptrend, CAD CHF H4 chart showing an uptrend, Euro JPY H4 showing a downtrend, whereas for Australian New Zealand dollar H4 chart also in the downtrend. So let's get into details with the chart analysis, starting with the pound. So overall, we can see that the pound is currently testing towards the resistance at 1.3260. And previously it has been rejected once during the early August and once previous week. And as it retests and form a long shadow closing back below the resistance level, we could expect that the overall bullish momentum for the GBP US dollar is insufficient for it to make a break break through above the resistance level. So overall, we might expect some retracement back towards the moving average, close to 1.3150, and prices will be expected to fluctuate within a tight range as investors wait for a Brexit outcome. So overall, cautious investors are advised to wait for the breakout above the resistance at 1.3260 before entering into long positions for the pair, where with a stop loss of 40 pips at 1.3220 and a take profit of 80 pips at 1.3340. However, for aggressive investors, you can take the opportunity to consider short positions at the current level 1.3240 with a stop loss of 30 pips and a take profit of 60 pips. Next, for the pair of CAD-CHF. Now previously we have covered that the pair is currently trading within an uptrend, and the pair is now testing back towards the support level and towards the uptrend line close to 0.6960. So overall, MACD, although signaling a diminishing bullish momentum, however, we are still waiting for further confirmation. So overall, aggressive investors can take the opportunity to consider long positions at the current level as it fails to break below the upward trend line, and the target profit could be at 0.700, which is also a resistance if we are looking back towards the previous level over here, one at July and one at September. So aggressive investors can consider long positions at the current levels at 0.6960. Stop loss should be placed 30 pips at 0.6930, and the take profit can be targeted all the way towards the resistance level at 0.700 as the first target, and the second target at the recent high at 0.7040. However, if the pair breaks below the support level and also the upward trend line, cautious investors are then advised to consider short positions with a stop loss and take profit of 30 pips and 60 pips respectively. Next, for the pair of Euro JPY. Now previously we have covered for a possible formation of a bullish flag. However, yesterday's trading has shown that the bullish flag formation was invalid after the breakout below the support level of 123.2. And currently the pair is heading lower towards most probably the next support zone at 122.5. So overall, investors are advised to consider short positions at the current level near 122.9 or 123 with a stop loss above the resistance at 123.3 and a take profit targeted first at 122.5, and a longer term target would be the support level at the 121.8. Lastly, for the pair of Australian dollar and New Zealand dollar. Now, in order to get this support and resistance zone, we will construct a Fibonacci based on the daily chart. So pulling over, we can see that the pair is currently testing towards the 50-point Fibonacci at 1.0540, and MACD signaling a bearish momentum suggests the pair to extend lower after successfully breaking below the 50-point Fibonacci. Now, cautious investors are advised to follow the trend, which is now currently a downtrend, waiting for a breakout before entering into short positions at 1.0540. Stop loss should be placed 30 pips from the level at 1.0570, and a take profit of 60 pips at 1.0480. However, if the pair fails to break below the 50-point Fibonacci, it will most likely fluctuate within the 38.2 and the 50-point Fibonacci, and the resistance targeted near 1.0600. Then aggressive investors are advised to consider long positions. Stop loss should be placed 30 pips from the 50-point Fibonacci at 1.0510, and the take profit first targeted at the resistance of 1.06, and the second targeted profit would be at the 1.0650. So that's all for our market briefing for today. Please remember to follow us on our social media such as Facebook, Telegram, Instagram, as well as Twitter, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.